Hello everyone, I'm Olivia, and I hope you're having an amazing day so far. I'm so glad you're tuning in because today, we are going to talk about something that might actually blow your mind. Have you ever wondered where the money in your bank account actually comes from? Most of us are taught from a very young age that we have to work hard, trade our time for dollars, and save every penny. But what if I told you that the institutions we trust with our savings, the banks, don't actually have to work for their money at all? In fact, they have the legal power to invent it out of thin air. It sounds like a conspiracy theory or a scene from a movie, but it is the literal foundation of our modern financial world. Today, I'm pulling back the curtain on how this digital alchemy works and what it means for your wallet. If you're ready to stop being a spectator and start understanding the real rules of wealth, you've come to the right place here at Smart Money Hub. We are dedicated to bringing you the truth about finance. So before we dive into the mechanics of this money magic, please take a quick second to hit that like button and subscribe to the channel. It really helps us grow, and you won't want to miss our future deep dives into how the economy really functions. Now let's get into it. When you walk into a bank and deposit $1,000, you probably imagine that cash sitting safely in a vault with your name on it. In reality, the moment that deposit hits your account, it triggers a process called fractional reserve banking. Under these rules, the bank is only required to keep a tiny fraction of your money, usually around 10%, on reserve. The other 90%? They are free to lend it out to someone else. But here's the crazy part. They don't just hand over your physical bills to the next person. Instead, they simply type numbers into a computer and create a brand new loan. Suddenly, that original $1,000 has legally turned into $1,900 of digital currency in the system. This is where the story gets even more interesting and, honestly, a little bit shocking. This cycle of creating money doesn't just stop with that first loan. Imagine the person who took that $900 loan from the bank uses it to buy something. The person they paid then takes that money and deposits it into their own bank. Now, that second bank follows the same rules. They keep 10% and lend out the remaining 90% to someone else. This process repeats over and over again through a chain of different banks and borrowers. This is known as the money multiplier effect. By the time this cycle runs its course, your initial $1,000 deposit could effectively create $10,000 or more of new money circulating in the economy. Here at Smart Money Hub, we believe it's vital to understand that our entire economy is built on this foundation of debt. Every time a new credit card is swiped, a mortgage is signed, or a business loan is approved, new money is birthed into existence. It's a system that relies entirely on trust. We all trust that those digital numbers in our apps represent real value. But the truth is that if every single person tried to go to the bank and withdraw their cash at the same time, the system would collapse instantly. There simply isn't enough physical paper money in existence to cover all the digital dollars the banks have invented. This is why the banking industry is so profitable. They are essentially lending out money they didn't have to work for, and then they charge you interest on it. While you are trading 40 hours a week of your life for a paycheck, the bank is creating capital with a few keystrokes. This leads to a massive expansion of the money supply, which is the primary driver behind why the cost of living keeps going up every single year. So, why does all of this matter to you sitting at home? Well, when banks create money out of thin air, they increase the total amount of currency in circulation. When there is more of something, its individual value tends to drop. This is the hidden tax known as inflation. While the banks are getting rich by collecting interest on money they created from nothing, your hard-earned savings are slowly losing their purchasing power. This is exactly why just saving money isn't enough anymore. You have to understand how to move your wealth into assets that can keep up with this constant expansion of the digital money supply. My goal today wasn't to make you lose faith in the system, but to give you the clarity you need to navigate it. Now that you know the secret of how banks operate, you can start making smarter decisions about your own debt and investments. I really want to hear your thoughts on this. Did you know that banks could create money this way? Or does this change the way you look at your savings account? Drop a comment below and let's talk about it. I love reading your insights and seeing how these topics impact your lives. Also, if you found this breakdown helpful, please share this video with someone who needs to wake up to the reality of the financial world. Sharing knowledge is the best way to empower our community. Thank you so much for hanging out with me today and for being a part of the Smart Money Hub family. Keep learning, keep questioning, and most importantly, keep building your own path to financial freedom. I'm Olivia, and I will see you in the next video. Stay smart and take care of your wealth.